This is 2091.50, not considered oversold. So let's go ahead and sell.
Order filled.
So now I'm short 5 contracts. The ATR is 2.5 points. My target is less than that, so 2 points. I doubled the ATR. And actually, let me turn on the entries here. Show you. Okay. All right. What's the maximum amount of time to hold on to this trade? Who knows? 4 candles. Right. Very good. So I need to make the 2 points or 2.5 within the next 4 candles, which is 20 minutes. It's enough time for this market to move in my favor. What about if there's proof that this trade does not and will not continue? Well, the prove it stop is any candle that closes on the opposite side of the Atlas line. So when I look at here a closing price above the Atlas line, I already know what I'm in store for. It always has to be less than 5 points, because remember, catastrophic stop, maximum of 5 points. Also, if this distance here is more than whatever the catastrophic stop is in this case, would be about 4 to 5 points, you're out of the trade. There's a few things to consider before entering. I mentioned in the beginning news. I mentioned overbought, oversold. I mentioned knowing if there's manipulation. Questions, anyone? If I'm going a little bit over anyone's head, please let me know. I'll be more than happy to explain. Dijon, questions for me? Dijon? Now is news, right? So there's not really a big reaction to the news at the moment. We give it a few minutes to make sure that the market just doesn't pop on any type of news, and it doesn't seem like the market's really doing anything. Dijon, I know you're in the mentorship, but these are definitely methods that I teach really the mentorship students, right? Roadmaps and X5s, things like that, for filters. So these are things that you know. Dave, can you hear me okay? Any echoing now? Ed, Jimmy, Jeff, John, Angelo? Just let me know if you have any questions. To answer your question, Ed, the best signals on the Atlas line are not the ones, actually not the one that I took where it's here at the lowest low. Actually, the best signals are where you have a situation where the market comes down and then retraces on the next candle up. It's still a short. One is a red candle, one is a green candle, but you're taking it short as it's testing where it's previously been. So always think about entering into an area where the market has already been and testing where it's already been. It's a higher chance that it's going to want to test that as opposed to going into the unknown. So I guess to answer your question, I wouldn't say it's a good idea to enter X number of ticks below because the market may not continue. And I need it for it to continue in order for it to be successful on this trade. So first, the direction. Then pinpoint the entry. Is it overbought? Is it oversold? Am I entering after the fact? All right, Paulus? John, I teach a few methods based on manipulation. They specifically tell me where manipulation is going to happen. And I teach this in the mentorship course. People pay for it. So I'm not really going to go into too much detail, but there are ways to know where the market is manipulated. And not only that, to avoid those areas. So I can't go into really great detail on that, John, but there are ways to know in advance. I would say stay out of an area where you may get run over. Okay. Jimmy says here, you're welcome, John. After triangle, how many bars do you wait before entering? The triangle. It's an element of time, Jimmy. It's not so much. It's a good question. It's not so much here. Let me show you. It's not so much. Uh, you're not waiting amount of candles. You're waiting for the price first. And if the price never retraces back, depending on where the signal was generated, then it's unnecessary to hold on to this because it's long gone. So it's not so much an element of time where you say, I'm going to give this a maximum of 4 or 5 candles and then forget it. It depends on where in the equation this signal appeared before a next signal happens. So see if I can further explain that. Okay, so let's say, Jimmy, that this here, this long here at this price, 20.99.75, which is right here, never enters long. And in the process, a new signal, a new setup occurs. Well, this is over. So it's not as if you're waiting an hour for this to happen. I would say it's a maximum of typically 10 minutes. It's a relationship of where the signal occurs at this price, not so much a set value where you say, if I don't get this within the next 5 or 6 minutes, leave it. It depends on the setup of the trade scalper equation. But I would have to say it's not more than 10, 15, 20 minutes. That's too long. It's a scalper. I mean, if this is going to happen, it should happen sooner rather than later, Jimmy. All right, let me show you a few other things here. So the trade scalper method that you're seeing here, while this here, 1.5 is not too bad. It could be worse. You see when the market is less than 2 ticks here? Not worth taking the trade, because in reality, you're just going for a tick. If the market is above 2 ticks, great, I can take 2 ticks. If the market's above 3 ticks, I can take 3 ticks. But when it's slow like this, there's a relationship of nobody trading and a lot of chop. So I want you all to realize that if the market is too slow to trade, know it, understand it, stay out of it, and leave it alone. Okay, so you see all these signals here? There's a filter that you say, I don't want to see a signal whenever the market is less than X on the ATR. It's actual, let me show it to you here. Here's the trade scalper, and here's a signal that says, if I don't want to see a signal less than 2 ticks or 3 ticks or a point, then it won't show you any signals. So you can, I have it turned off at the moment. So you can actually have a filter built into whatever you want that says only signals above the price moving a certain high to low is worth me taking the trade, okay? And so that's the ATR filter. And by the way, I offer at no charge the NinjaTrader platform with live data in sim mode, obviously, to practice, because I think it's more important for you to understand what's happening than to just, I would say, jump in head first. Practice, test it, know what you're doing, ask questions. These are all things that I definitely push my traders to do. I don't want anyone to just jump in head first. So with anything that I offer, I want training. You have to go through the training with me. I want you to ask questions. I have a great tech support team that even installs all of this software and courses on your computer if you are unable to, if there's a problem. So my goal is definitely really to push this into more of a understand what you're doing, not just follow software, or not just look at the chart and because it says long, go long. Take it a step further. Know how and why we're doing what we're doing. Okay. So these are the settings here for the trade scalper, and if the ATR is less than 2 ticks, you can actually set it where you don't see a signal. So these signals that you see here pre-market are just too slow. And there's definitely a comparison to when the market is slow and nothing happens. It's cut and dry. If it's less than 2 ticks, don't trade. If it's more than 2 ticks, it's slow, 2-tick target. If it's more than 3 ticks, great, you can take a 3-tick target. So here, because the ATR is a little bit more volatile, definitely 3 ticks, no problem. If it's less than 3 ticks, only take 2. All right, one other thing that I want to offer to you is something that a lot of traders don't even think about, and I think this is important. Adapt to the current conditions. What do you want to look at, Ed, on the scalper? I can bring up, since I have it up here, you said Renko bars, I think you mentioned. If I bring up a Renko bar, do you want to give me the values and see if it works for you, Ed? I focus on the time charts, right? But we can look at a Renko of 6, right? You said? Okay, so I'll show it to you in a minute. All right, so let's take a look here at the Atlas line and this trade here that's really going nowhere. So you remember when I said to you that after the market makes a big move, I said to you, don't expect a lot to happen as far as a continuation. Well, I said that because it's common for when the market makes a big or strong push that it takes a moment to breathe, or it takes a moment to maybe take profit or reverse. So what you're seeing here is almost like I mentioned, the market made a big move and it took a little here time to catch its breath. And catching its breath, think about profit taking, right? Because that's the only reason why the market turns around and goes up. It's because there's profit taking. Here is, let me just expand this out so everybody can see this a little bit better, like that. Okay, so I was going to mention to you something and then I got sidetracked here. And I'll show you Ed the Renko. You see how this ATR sometimes changes up or down? My expectation on entering into this trade here is 2.5 points. I know that this isn't really going to be that much different from moving up or down. Maybe it'll go up a tick or down a tick. But I have to say, be adaptive, because if this goes down, it means the candles are getting smaller and tighter, because it's always referencing the last 4 completed candles. So what it's looking at, this ATR, is these 4 completed candles to create this value of 2.5 points. And then this, and then this. So you see it does change, but not that dramatically. It changes slightly, a tick up or 2 ticks up or down. So what I'm suggesting to you is that if this average true range gets smaller, it's indicating that the candles are beginning to contract and the candles are beginning to get smaller. The profit target initially may not be reached. So adapt while you're in the trade for these 4 candles or for the 20 minutes. While you're managing the trade, manage the trade also by being more conservative if this ATR begins to indicate the market is beginning to consolidate or beginning to get smaller. And if that's the case, drop your target like that or like that, right? But on the flip side, if the market becomes more volatile and the ATR increases, it hasn't really changed, it's still 2.5, keep everything the same. Don't increase your target, don't increase your stop, keep it the same, because it could actually be going against you, even it being more volatile. I want to show you that being adaptive to the current conditions is of utmost importance. Know as much as possible direction, the current conditions, whether or not it's overbought, oversold. Know all these things before jumping into a trade. I tell everyone you don't have to just take everything. Pick and choose what makes sense. Now, as far as a time-based stop, this is 1, 2, 3. I have a minute and a half left, almost 2 minutes left in my current position. At the close of this candle, if I'm unable to make the target based on the ATR conditions, the trade is closed out. Now, a lot of you may be wondering, why didn't I just close out the trade here when it came close? Because I'm trying to stick to rules. I'm a rule-based trader. Time-based stop, prove it stop, catastrophic stop, 1 times the ATR, being more conservative, and adjusting the target as you move forward if it begins to consolidate and get smaller. Makes sense, right? It doesn't have to be complicated, right? Dejan, you're out of that trade. 1, 2, 3, 4. Oh, you're right. You know what? Um, you're right. That is the fifth bar, Dejan. My mistake. And I didn't realize it. You're right. This is 1, 2, and then 1, 2, 3, 4. You're absolutely correct. All right, I'm closing out the position.
Target filled.
Thank you. Dejan's one of my students. Thank you, Dejan. I didn't realize that. You know what? I saw the entry signal here, and I was counting as if this was the entry 1, 2, 3, 4. I wasn't paying attention. But you're right. Anybody have any questions? All right, Ed, you want to see the Renko. So let me take a look at, you're absolutely right, Dejan. Let me take a look here. Sometimes it's hard to trade live and do these webinars because I'm trying to explain and show you multiple things, but you're right. This was not the, these are the 2 candles that dictated to go short at the close of this candle. So 1, 2, 3, 4. Absolutely right. My mistake. Okay. So Renko bars, I think it's these here, right? Okay, so this is the scalper. Is it the E-mini, Ed, that you want me to take a look at? Because I can show you any market that you want using the Renko. So this is what we have here on the trade scalper. For Ed's configuration, he likes to use Renko bars 6. So any particular day you want to take a look at, Ed? A bit more data here going. We'll do 90 days. All right, there you have it, Ed. Now, I haven't updated the next mentorship class. Those of you who are interested, remember I include everything in the mentorship program. So all the courses, Trade Scalper, Atlas Line, the roadmap, the X5, these manipulated methodologies I teach. And I haven't posted the next date, but it'll be shortly up there. If you need to call me or contact my staff, if you are a client that needs assistance, please let me know. And you can always email us. And this is loading some data here. I would say, Ed, to add a 1-minute chart here. 1-minute chart, just to have an idea, because the Renko may not be equivalent to, let me show you here. It may not be equivalent, Ed, with the ATR. So if you are going to look at this Renko 6, I would definitely recommend at least knowing what the current conditions are as a guide. And the ATR is really important to me, so I want to make sure that I say before I go long or before I go short, have as much information as possible. Is it too slow or too fast? So right now, any trade 3 ticks is fine because it's more than 0.75. But if you're looking at this Renko chart and it's dropped below 3 ticks, then I would suggest only 2 ticks, or if it's dropped below half a point, don't trade at all. Okay, so here is the slower period, but anything above that, 3 ticks or more is fine. Okay? So that's how I would approach it if this is what you're after, to have just an idea of where we're at here on the current conditions. All right, guys, I'm available if you need to call me or contact me. Yes, Ed, it'll be available for Ninja 8. I have it actually coded already on Ninja 8, but since NinjaTrader 8 is in beta mode, there's always bugs. I find this to be a problem whenever new software, whether it be Windows 10, whether it be the latest iPhone, there's always problems. There's things that need to be configured and updates. So I don't want to be a guinea pig. I would rather say to you that look at the market instead, or I should say, look at the NinjaTrader 8 after it becomes live with any updates or any emergency patches, let's say. And let me see what the outline is doing. And then we can go ahead and update. I think that would be make more sense. So I have it already coded. I'm testing it. I want to make sure it's compatible with the multiple brokers, the Canadian brokers who use. They don't use NinjaTrader brokerage firm. They use a different type of brokerage firm. And also, if you are an international trader, you could look at the Atlas line, which I don't because I'm sleeping at this time. But you can look at the Atlas line overnight as well on any market. If you want to look at the Euro or Forex. So here is last night on the E-mini S&P, the Atlas line based off the Life Exchange London Open. Now, remember, I don't have the ATR up, but I have to know whether or not the ATR is worth it. So you can see less than a point. I'm already seeing that it may not be worthwhile. Yep, so this here, this short here, was less than this, no trade, right? So I know the trade was a winning trade, and that's not really the idea. The idea is to say, when this signal was provided, should I take it? Follow the rules and say it's less than a point. There's going to be chop more often than not. Don't trade. Here, 1, 2, right there to go long. This is a 1.25 target, but is it overbought or oversold? It could be. Oops, that would be like that. It's 5 points. This should be a maximum of 2.5. That means it's overbought. Don't trade it. It's not worth taking the trade. Wait for a better opportunity. And again, look what happened as soon as this indicated to go long. It's overbought. I understand it's overbought. Market turned around. Then you have pullback and strength trades and bounce trades, all that stuff. Yeah, George, I did record this. I'll post it on YouTube. I'll post it on DayTradeToWin. If you have any questions on what I taught or what I showed you, feel free to email me or call. You know, I prefer email. I get so much email that you'd be surprised. But just take it easy. Take it nice and slow. I think the best thing to do is pick and choose the trades. So for example, if I added the bounce trades, you're going to see a bunch of bounce trades here. But I'll tell you right now, not every bounce here is worth taking. Real quick, I'm going to set the bounce trades to true. You're going to see them pop up. And let me see why don't they show. Oh, because I turned on the wrong one. It would be the overnight trade bounces. Okay. Okay, so you see the bounce trades there. And so the idea here is to take a trade because the market's bouncing off of the Atlas line, right? Simple, you expect it, you know it's going to happen. But since this candle is a lower close and open, I would not consider that a valid candidate to go short. This candle, on the other hand, also another bounce. So these are the bounce signals here on the Atlas line, is indicating go bounce long on this candle, go long on this candle, and go long on this candle. This candle right here should not be taken long as a bounce because it's a lower close and open. It's a red candle. It doesn't give me a lot of faith that the market wants to go long or bounce off the Atlas line. This candle is green. It's a higher close and open. That's a long trade. That's a long trade, another bounce long. So the Atlas line gives you these signals. You're going to know in advance why and how and where they're going to happen. But you have to take it the extra step and say, before I go long or short, give me a reason to take it, give me a reason to stay out of it. And this is a perfect reason. This candle, even though it's indicating as a bounce, meaning it's bouncing off the Atlas line, since it's red, this is what it looks like. That is not a good opportunity. Wait for a better opportunity. This one is a bounce candle to go long. Here, you're long. Here is not a bounce. This one is a bounce. So these signals are corresponding to closing prices, and that's why I recommend the bar timer, which I don't have here, but because that way you're not caught off guard. You know when this candle closes, it's a bounce, you expect it, you're waiting for it, you're long. So I will post this. You got it, Angelo. Stay safe. Paula says here, as another day trade method, do you like trading a bar close from high to low above the 50% fib for long and vice versa for a short? You know, there has to be a reason why. So it's not just any candle, Paulus. So if you're looking at just doing that in any situation, like you know, just because it did this, oh, oops, wrong, like this, just because it did this, right, to go to go long, or another situation maybe to, you know, there has to be a reason why we're doing it, right? So I'm not against any idea, but there has to be something that backs it up, right? So going long or short, 50%, high, close, fib, um, vice versa, sure, but why? Why am I doing that? Because that could be done at any situation or in any time frame, but there has to be an underlying cause for it. Something that reminds me of is the X5 method, where I use the fib here, the 50% high to low, when calculating the part 2 of the X5 method. Market does not respect manipulation. What happens is it acts as a magnet in the opposite direction. And I use that for my X5 trade, always. All right, guys, I got to run. I will see everyone on the next webinar. Email me if you have any questions, and stay safe. Bye-bye now. Thank you.